so give me a second there. All right, so here we can see my chart. All right, there's my chart, right? So first thing we need to understand is, what is liquidity? What is this thing that resides in a market that is called liquidity? We need to understand what it is before I can teach you a concept, or rather a strategy that works using this. Because if you don't understand what it is, then how am I going to teach you something without an understanding? So I need you to understand what liquidity is. All right. So in order to understand liquidity, right, you need to understand that there's a buyer and a seller in a market. In any business, there has to be a buyer or a seller to make your money. All right, so we need to understand, right, that if there's a buyer in the market, right, and then there's a seller in the market, then obviously we call this a supply to demand or demand to supply. If you have what I need, you're going to supply me. If there's a demand for that, I'm going to need the supply. All right, simple as that. That is what we call, or this is how I give you an understanding of what liquidity is. So let's go into an example, right? Let's say at this level, we had a bunch of sellers, right? Price then came down and we got a bunch of buyers, right? Then all of a sudden price comes up, and what happens? The first bunch that tried to sell left orders at the top over here waiting to be generated into a market. It's like a slotting machine. You put money in, right? And then you push down the lever and then you wait for something to happen, right? Either they're going to take your money or you're going to take their money. But one is either going to win and one is either going to lose, right? So everybody at this level is selling off this market. They've got orders sitting at this level waiting for price to come up and then stop right at their orders, trigger their orders, and then start to sell the market off, right? So now you need to understand that the order sitting over here, we call liquidity. We call money. You understand? They need, right? They need some kind of petrol. They need some kind of energy. They need to gather this energy somewhere in the market in order to push price lower. They need a fuel to push price lower. Where do they get this fuel? They get it from these guys over here. That's where they get their fuel from. They get it from these guys over here. Because if I come up and I take all your money that's sitting over here, do I not have enough money now to push the market lower? I do, but I needed to go get fuel. Liquidity. I needed to go get their money before I could push price lower. And as I'm pushing price lower, I know now that there are also buyers over here. So why not kill two birds with one stone? Right? So we've got the seller sitting over here and the buyer sitting over here. Right? Because what happened was, soon as price came down, everybody believed, we're going to go and test this high. Right? Which price does. But then we have a fail enclosure and price pushes lower. So here, right, here we have the early, listen to that carefully, early sellers. Here, the buyers got in too early. This then creates money in the market that's just waiting to get taken. So what happens is, they come in, they take it. They come down, they take it. So now we've taken the sell side liquidity and we've also taken the buy side liquidity. Right? So there's two things we can do here. Right? It's either, right, we first take the sell side liquidity or we take the buy side liquidity. And as you can see over here, they took the buy side liquidity and then they took the sell side liquidity. Right. Now, how would I know that they were going to take the sell side liquidity after taking the buy side liquidity? Because normally price can just do something like that and range and then all of a sudden go higher. Right? But there was a confirmation for me, which I'm going to show you, that will then give you an understanding, right, on what to expect in regards to price and what price is actually doing. And I want to remove all these things. Just give me a second. Oh gosh. So understanding this is going to help you understand liquidity, is going to help you understand what the buyers are doing, why they're doing this, right? Because I can't just do something without having some kind of outcome. I need to know that I'm doing this because I'm expecting an outcome. Right. So here on the 1 hour time frame, right, there was a conclusion that was made over here, right? There was a conclusion that was made over here. So if we look at this chart here quickly, right? Let's try to go into the screen a bit more. There we go. All right. So now it makes a bit more sense. There we go. Right. So over here, right, we can see that liquidity was generated. So as I said before, liquidity is generated right over there. Let's just turn that into a different color so we can go here and put that into black, right? So like I said, liquidity is then generated over here, right? They come and they purge that liquidity. So they're done going higher, right? Why? Because we've now got liquidity sitting over here. So this is now where we get into a strategy. We're now going to get into a strategy to target this low. All right. So now that we understand liquidity, I can start teaching you guys a strategy to purge or understand which liquidity they're going to take next, right? So here was a low, right? So here was a low, right? But over here, there was also liquidity generated, right? So once they took this, we knew that it wasn't over, because after creating this, they would need to take that, right? And it's within the same region, so they're good to go, right? So what happens is price goes up, and then what happens is price takes that liquidity out, right? Takes all that money, and then price can then do whatever it wants to do thereafter, because it has completed its job. It has taken what it needed to be taken, which was money, which we call liquidity in the market. All right. So we took buy side liquidity, we took sell side liquidity. There was generated sell side liquidity, and that was taken once again. Right. Now, what we want to do, right, is wait for price to come in and take and purge the buy side liquidity or sell side liquidity. Either way, right, what we want to see is we want to see sell side or buy side liquidity taken. We won't know which way it's going to go until something like this takes place. Now, what this means is price came in, and as I said before, price then took those early sellers. Right? What happened was Price then came up. Look at this candle over here. Price then came up and tried to take this high. So if you look at that high over there, right, you can see that that was a fail enclosure. They failed to break higher than this high, which was telling you that price is losing momentum, right? But they're not done purging. So we obviously knew that they're going to go and try test this high because they need to take out these guys over here. Now, if we go back over here, right, and we had to, like, let's say, draw a line, right? So we had to say, okay, fine, let's draw a line from here. Let's move that over there, right? If we look carefully, they came in and they purged. They took out the early sellers, right? But you can see that they hadn't done purging, right? They hadn't done purging. Why? Why would I say, listen, they're not going to go lower yet? Why? Because over here, let's quickly open this up so everybody can see here. You can see that these guys over here failed to take out the high over here. So we had liquidity and then liquidity. Then price comes up. So just give me a second. Price comes up. And as price comes up, these guys over here get involved. And what do? They take out these guys. But now we have a problem. Because now we have what we call a sell side liquidity. Where is the sell side liquidity? It's sitting right over here. These guys came in and started to try buy the market. What does this tell you? This tells you, right, that they're not done purging. Why? Because there was liquidity, right? So what happened? What happened with the market? If you look very carefully, when we go back, you can see that they didn't come for this low. They came lower, right, in order to go higher. So they came in over here, but who did they take out? If we see over here, they took out the early buyers. Came down and created multiple wicks, which we once again call some kind of energy money, something that moves the market, we call liquidity. Then price comes up. What does it do? It then wicks. If we look carefully over here, you can see that massive wick over there to make sure that anybody who was trying to sell over here, had they stopped maybe over there or over there or over there or over here, was taken out. This is telling you that the trend is about to change, right? The trend is about to change because they've taken everything they needed to take. They've taken all of this and these guys over here out. There was nothing more to be taken. There was nothing on the side over here. There was nothing over here. Nothing over here. They had done what they needed to do. This is now when we get involved to purge this liquidity, right? So not this liquidity, sorry, made a mistake. Not that, because we've already taken that, right? We've already taken that. So we have liquidity sitting over here because obviously we can see over here that liquidity was not taken, but rather generated in order to take everything at one go, right? But we want to get involved over here. We want to get involved when they've trapped, when they have taken everything they need to take, and they are now ready to go and purge the lower liquidity, the sell side liquidity. So we want to get involved in this candle. So what I want you guys to start doing now, right, is you want to go to a 15-minute time frame, right? We want to go to a 15-minute time frame. So we want to take this candle over here. We want this 1 hour candle. That's all we want. We want nothing more. We want that 1 hour candle, and all we want is the wick. So once price came down, price started to go up, right? Now, when you can see that there is about 10 minutes before the 1 hour candle closes, how you can see, right, is price will always show you that over here. So over here, you can see, I'm going to mark it out quickly in a square and see if you guys can see that, right? Over here, you can see there is a blue, almost like a sticky tape, if you want to call it, not a sticky tape, but yes. Here you can see that price is obviously sitting at 15,128, right? Now, what you can also see over here is when the market opens, there is a timer telling you how long it's going to take before the next candle opens. All right. So this is going to show you when the next candle is about to open. All right. This is going to show you when the next candle is about to open, right? So now, right, let's pretend, right, that this hasn't happened yet. So all of this has not happened yet. None of this on the side has happened yet. So we basically have nothing there, right? But what we are targeting is this low, right? And once we break that low, we can then target further liquidity that is obviously going to be then taken. But what we want to cover right now is that low, right? So this could be a day, this could be 5-6 hours of trading, but it is profitable. I promise you that. Big money will be made. That I can promise you, right? If, and only if you understand this, right? So now we want to target that liquidity, right? So we want to go and target the last 10 minutes of this candle. The last 10, between 10 and 15 minutes, up to you. Between 10 and 15 minutes, you want to try target that wick. You want to get into that wick. So what we do is we go down to a 15-minute time frame, right? Now, obviously, within the 15-minute time frame, right, we want to see them purge, right? So what did they do? You see this liquidity sitting over here? They took it. This liquidity sitting over here? They took it. But now, what I want you to understand is that within that 10 minutes, we're going to see something like this, where price quickly, right, comes in and purges that high, right? Price comes in, if you can see over there clearly, you can see over there, price comes in and they take that high. They take that liquidity. This is telling you that they're done. There's nothing more to the side, not to the left, nor to the right. They are done. We are now going to target, right? We are now going to target the low, right? So now, right, we're going to wait for the 15-minute candle to get to 5 minutes. The 5-minute candle is now closing within 5 minutes. The 15-minute candle is now going to close within 5 minutes. We are then going to jump to a 5-minute time frame, right? Within that 5-minute time frame, right? What do we want to see? We want to see a break of structure, a change of character. Do we get it? Yes, we do. We get it right over here, right? So over here, you can see they take that liquidity, they purge that liquidity, and what happens is we then get a change of character, right? This is now telling me that the trend is over and we can now start to purge, right? We can now start to purge the low. So now we are getting involved at any of the highs. You can get involved at any of these highs. These highs are going to be liquidity, but they're going to be liquidity once they take out the lows. So we're okay, right? So what we're going to do is we're then going to get involved anywhere here. The first high, you can see that not once did price go higher than any of these highs. Price stayed there. It was consistent because why? It did what it needed to do. Price is now going to fall, right? If anything, you might get a 10, if even 10.5 point drawdown, right? But as you can see now, if we had to go back to our 1 hour time frame, we would now be purging that low, right? And now you can see that we got involved over here. We were not supposed to get involved over there. We were supposed to get involved at these wicks. So let's do that again. Over here, we're not supposed to get involved over here. We're supposed to get involved over here. This is where we're getting involved. We're not getting involved over there. So that was wrong. So let's go back to our 15-minute time frame within there, right? Okay, great. So we're there. Let's go into the 5-minute time frame within that box. Great. There's our change of character. Same thing happens. Nothing comes higher than this, right? So there's our change of character, right? Within that box, here's our change of character. It takes place right over here. So there's our change of character. We can then get involved as soon as price comes up. So we can then get involved over here. We can get one position in over here, or maybe 5 positions like myself. Get in 5 over here. Get in another 5 over there, because I know price is not going to purge that. Because why? They're going for the low. Get in over here. And then start to sell off. So on myself, I might have 25,000 and I'll be getting 5 positions in at each of those points. And I will be targeting that low. And as you can see, price comes down and we hit our take profit, which is this low. So that is the strategy. It works. And once you understand this, believe you me, it's going to bring you lots and lots of money. Right? And this is just a strategy on liquidity. Right. So I'm going to put the comments on and just see who understands it. And let's see what's going on. All right. So let me turn on the comments. And here we go. Everybody understand? Yeah, guys, if you got in late, then I don't know what to do. And guys, what you can do is you can even target bigger liquidity. So you can target a 4 hour. You don't only have to target a 1 hour. I prefer 1 hour because that's like scalping on my side. You understand? I prefer 1 hour because that's scalping on my side, right? But it doesn't have to be like that, right? I can go and target, right? I can go and target a 4-hour chart. I can go and target a 4-hour candle. I can go and target this, right? As you can see over here, we did the same thing, right? So I can target this 4-hour candle. And what am I targeting now? I'm targeting the 4-hour low. So you see, things get bigger. So on the 1 hour, we targeted the 1 hour low, right? But over here, right, we can also see that there is a lot of liquidity sitting over here. So you can then target this low, right? You can then target this low. Same thing. You can go into a 4-hour candle. You can even go into a 1-minute time frame, right? And you can get in at a change of character. That's all you're looking for. So over here, you can see price. I'm just going to show you something. So over here, price brings in a change of character on the 1 minute. Like I said, 5 minutes, 1 minute, up to you, honestly speaking, right? Then you want to get in when price tries to tap into that level or gives you your first low and then a high. So price comes in, price comes down, and price then goes up. You would then get involved over here, right? So you could get involved over here. And then if we go back to our 4-hour candle, you would then obviously see where we are getting involved. And on the 4-hour candle, we would have gotten involved right over there. That is where we would have gotten involved. And if we're getting involved, we are then going to then target this low sitting at this level, or perhaps after taking out this low, we would then get into taking out that low after securing profits, right? So for now, I know that I am going to target the liquidity, right? Because if I look over here, I have taken what needed to be taken, right? If we take away this box, for me, price is going lower. Why? Because they've purged, right? So if we look over here, there were orders sitting at this level, right? Over here. There were orders sitting at this level, right? There were orders sitting at that level, right? And then there were orders now sitting at this level, right? Because there they failed to take out the orders that were sitting to their right-hand side, right? Or rather, yes, their left-hand side, sorry, right? So on my left-hand side, you can see that at that level, right? At that level, we purged, right? But we failed, right? So what does this do? This gives us something called equal highs. Equal highs. And what happens when a market gives equal highs? It's trying to show you that the trend is about to change. It's trying to show you that, listen, there's going to be one more purge, and then the market is going to then fall. Right? You then know that price is then going to fall. So what do? Right? What do? You get involved after they've purged. So here on the 4-hour time frame, look at what happens over here. Price goes up. So price pushes up, tries to take this liquidity, right? Tries to take that liquidity, but fails. Right? Fails. Which is telling you now that the buyers are starting to fail. The momentum within the buying power is failing. Right? So what is this telling you? This is telling you that they're going to try and do it. Right? Because what do they want to do? They want to take that. They want to take that. They want to take that. Right? Because here they failed. So if they failed over here, right? At that wick over there, if they failed over there, they're going to try to take this one. They're going to definitely try to take that. Right? So once they fail, right, this is telling you that the buyers are failing. right? This is telling you that the buyers are failing to push price higher. So what are they going to do? They're going to go and grab that last high, right? And then this high. So price goes up and it takes that high, price comes up, right? They generate liquidity, so then they take that high, right? If I then go to a 1 minute time frame and I get a change of character, right? That is telling me that the minor trend has changed from bullish to bearish, which means that the minor trend is going to follow through with my setup, which I believe is them taking out the sell side liquidity. So a change of character gives me that confirmation that, listen guys, the buying power is over. It's time to start selling the market. Does everybody understand? And guys, that is all it is. It is money being generated and money being taken. Someone is a buyer and someone is a seller. Someone is winning and someone is losing. It's just like going to a casino. It's either you winning the casino over or the casino's winning you over. But someone is winning and someone is losing. And that's all you want to see. Someone winning, someone losing. If the price comes up, right? If price comes up to this level, right, and it takes out these guys, but these guys get lucky and these guys get involved and these guys know that price is going to come to this low, then these guys win the market over because price then comes to your level in which you said price would come to, right? Unfortunately for these guys, price takes them out. So if you were a buyer there, price took you out, you got into early, try again another time. However, though, those who got in at that next high, when the purge was already over, right, would then secure the bag and get involved at that low, and they would then win. So one is winning and one is losing. One is giving back to the market and one is taking from the market. That is manipulation, inducement, in whatever you want to call it, right? But that's what they do. So they generate all this liquidity. Let me explain it to you again, right? So they generate all these highs and lows and highs and lows, right? So they generate these levels, right? So here price makes a low. It then goes for the high. Price then comes down and we generate a low. We can also call this an ABC pattern, which I am not going to get into right now, but again, a very profitable session that takes place where you can make a lot of money if you are a swing trader, right? So the reason I know that this trend is not over is because once you understand ABC and its patterning and understanding what's happening over here, we then want to see C get taken out and so forth and so forth. So obviously I know price is still going higher. It has not stopped or it is not done going higher, and we will not see it go any lower before going higher. And for what I'm looking for, right, I'm looking for something that is going to show me that price is no longer going higher. This is the end of a major, right, price rejection, and we will then start seeing a declining in that same price rejection. So price is rejecting buyers, and we will then start seeing sellers coming in, right? But because this is on such a higher time frame and we see this type of pattern play out, we then know that long term, the sellers are starting to come in, right? And the buyers have stopped to climb higher in price. They have decided that, listen, we're stopping to buy price at this level, right? We are now going to go for a discounted level within price, and that's why price starts to go lower. Now on the time frame like this, when you're starting to now stretch it and you're starting to then get involved in regards to bigger liquidity levels, we start going to those type of lows and perhaps even going lower, right? Until they give us the same confirmation up here, down here. So if they don't give me that confirmation, I know that they're going to obviously continue to sell. So what do? I then target the next liquidity. All right. Now, obviously, that is in the mentorship. I'm not going to share that with you. What I am going to share with you is this strategy. So obviously that confirmation and what you look for is all in the mentorship. And that just helps you obviously to then swing your trades and obviously make bigger gain in profits and obviously help you take your trading to the next level. If you want to be a swinger or whatever it is that you want to be, whether you want to be a swinger, whether you want to just be a intraday trader, whether you want to be a scalper. But what this helps you understand is what we are targeting. You understand? What we are targeting. And as we target, you must understand, as we target certain levels of liquidity, right? You want to understand, right? You want to understand that when we target these, we take partial returns, if you want to call it that. So we take a little, and we continue to let that trade continue to fall, right? So as we make a bit of money, we take a bit of money. As we make a bit of money, we take a bit of money. So we don't lose the money. You with me? Right? So we don't lose the money. So what you want to do is you want to understand that, listen, in order to not lose the money and continue to give the money back to the market every time it gives you money, right? Take the money and put it away. Because you already know, like if I know, right? If I know that price is going to come to this level, right? If I know, okay, fine, price is going to come down to this level and I am secure in that perhaps there's an FDG, an imbalance, an insufficiency, whatever the case is, as we see over here, perhaps maybe price is coming into this order block, and we'll get into that obviously another time, or rather should I say, when you are within the mentorship, you will then understand an order block and what it is and how we use it to obviously better our trading. But obviously price then comes into this order block, but as I see that there is insufficiency below that, right, this order block would probably not hold. We would then use this level as an inducement, right? So price would then induce people to buy in there, thinking that there would be maybe a trend line sitting over here. Price comes into that trend line. So obviously we have a trend line sitting maybe somewhere over here, and price is now coming into that trend line, and everybody believes that price is going to go higher. Price then induces everybody who's sitting at this level and comes lower. Why? Because there is an insufficiency below that. I don't know what I did, but there is an insufficiency below that, and price will then fail the first insufficiency and go to its main insufficiency. And if you don't understand that, then you clearly need a mentorship. Otherwise, yeah, that that's basically how this market operates. And this is obviously how we generate liquidity, and this is obviously how we, target liquidity in regards to making money. So yeah. I think I'm done. It was really quick, and you should definitely have you could say that it's the same as, let's say, since someone's saying that there wasn't a trend line, let's say there was a trend line from here to here to here, right? So this was obviously your first touch, price goes up, touches, comes down, comes to your trend line, touches, comes down, comes to your trend line, comes down, and then price goes higher, right? Just making an example here. I'm not bashing trend line traders. I'm just saying that in most cases, it's for people who are trend line traders. It's for people who are getting too early into the market or too late into the market or whatever. But at the end of the day, you guys get induced into a market into believing that the third touch is going to fall, and price doesn't fall, and price goes higher. And then you look for that breakout, and then price comes down and takes you out, and then price goes higher. It's just the way it is. These are targeted for retail traders, and retail traders are trend line traders, and retail traders are people who are learning to just trade, and they have learned to buy low and buy low and sell high, right? But what happens if you are selling low, right? Because you were told to sell low, right? So you sell low, and then price comes up and takes you out. Then you're like, but I sold low, right? I sold low, but price still took me out, right? I sold high, right? Everybody's teaching me to sell at my level of resistance. I sold here, price took me out. What's happening? It's just the way the market works. It's just the way the market works, right? Price is going to generate. So when you understand liquidity, you would understand that price is generating liquidity at that level in order to take that liquidity out. Why? Because they had done what they had to come do at this level. There was liquidity sitting at this level. Once again, liquidity sitting at that level. Price comes down, takes out that level. So obviously we know they're going to go and purge the high. So if you were buying high and trying to gain, you should understand liquidity and understand that at this level, liquidity is being generated, right? Because they've done what they've had to come do at the bottom. So now they're going to go and generate what they need to generate at the high. Does everybody understand?